For the week of August 26, 2013, we are starting the week here pretty much with the markets unchanged. The biggest mover overnight was China, which was up about 2%. The rest of the markets like Europe is slightly down, and commodities start the week slightly to the downside. Just let's call it unchanged. If we take a look at the NASDAQ weekly, we see that NASDAQ is now within range of a fresh breakout. After 3 weeks of rest, it can now tackle this 3689.59 level, which is the highest weekly close going back many years. So if it can hold itself well, it could have a chance of taking out that high of 3689.59. Again, the highest weekly close is within range, and this is all after the market held this 10-week moving average, never even touched it. So the momentum still remains to the upside. We'll see what happens as far as the NASDAQ is concerned. Let's take a look at the Dow weekly here, and you see the Dow, unlike the NASDAQ, is trading below the 10-week moving average. We'll see whether it's going to bounce based on this trend line support that connects the lows. See whether it's going to bounce off that. The market is way off its breakout level, so this one seems to be more like a market that could move lower. Also, we have RSI on this lower line here, potential RSI support here with a move higher or a breakdown, which could also push the Dow below 50. That would mean a big down week for the Dow if the RSI moves below 50 on the weekly time frame. As far as the MACDs are concerned, for the Dow, the MACDs look bearish because we are breaking this trend here. We've also turned and crossed over here, moving below zero. This seems like a market that is not ready to be moving higher as far as the weeklies for the Dow are concerned. We take a look at the Dow Daily. We see that the last time the market made lows and moved higher was here, which is this low. And then again it touched this level here, which was this low. And the market is doing the same thing here, which could suggest this could be a low. We'll see what happens, but that's where it's been bouncing off for the last year and a half at the 30 level on the Dow Daily. So we'll see whether it's going to bounce again or not. On the Dow Transports weekly, we see that they managed to recapture the 10-week moving average, which is good. That's how you build a nice base. And also notice that the RSI trend line held short term, so we'll see whether this is going to continue holding. Now if we break this support level there, that's going to suggest the market's going to be moving lower. Right now we can say the market is trading in this wedge. One way or the other, we are going to consolidate out of that wedge to the upside, or we're going to consolidate to the downside. Dow Transports, from a daily chart, you'll see that you take that low and this low, draw a straight line. The market's been finding support on that level there. So found support here, and lately here. So this could also be an area which corresponds to the 50-day moving average. That held. So that means that the market is starting to build after this pullback here, building on a new base. And even this chart here has not broken down. So one can conclude that the transports could also be pushing the market to move higher over time. The S&P 500 weekly, you see that it ended the week at the 10-week moving average. So that's not a broken chart. Also, we'll see that the RSI continues to show support based on these levels here. This line has held the market together and it seems to be holding. So as long as that line is holding, the S&P 500 is going to be moving higher and probably take out that 1709 level. If it breaks down here, then that's going to suggest that now we are on a renewed, fresh move lower. The MACDs don't look very good for the S&P 500. Again, you see that they're all pointing to the downside there and about to break here. So the weekly MACDs don't look that good, but as far as the price action and the 10-week moving average, that looks decent. We'll see what happens. The main thing for this week is not to break that support line there. Let's take a look at gold daily, and you see that gold has broken out twice. As of last week, it broke out above short term about 1348, which was successful, and again broke out on Friday above 1375. If it can hold above those two levels, 1375 for now, that's good. It means that as long as it's holding above that, gold has a chance of moving higher. If it breaks below that level, then you have to start wondering whether this move is done. All right. If you take a look at the gold weekly, we see that it is now for the first time back above the 10-week moving average. It is now also back to this RSI backtest retest level here. So this extend this red line, and you see that if it fails to hold that level there and coils lower, any coiling is going to suggest that gold has peaked short term. A quick look at crude oil, and we see that it needs to break out above 108.16 for this to be a fresh breakout. The last chart we need to look at here is for copper, and we can see copper has come back to the 33-week moving average. It needs to hold that level. Also looks like the RSI is showing signs of multiple resistance. As you can see, the top lines on this RSI level and the back test of the blue line here. That indicates that copper could also be showing signs of resistance after a nice bounce after hitting $3. So we'll see whether it's going to find support there or it's going to coil down and move lower in this new week. Eric Mwatha, good luck, peace, and a blessing.